time. Dilip Bhat is joining us from Prabhudas, Lilladher. Dilip, good morning. Good to have you with us here. Thanks very much. Are you expecting a big turn, Dilip, anytime soon? Some are. Turn for the better, turn up for the market.
Well, I think the markets will continue to remain choppy, so very difficult to have a one-sided expectation that it will recover. Even if it recovers, it will be amidst a lot of volatility. So we'll see a lot of ups and downs. I think with Fed rate increase also around the corner and most of the results being out and they have not been really all that great. So I think taking both the factors into account, even if there is some kind of recovery or optimism, I think it will be, it will be definitely be intervened by a lot of ups and downs that the markets will see. So I think we'll see a decisive movement possibly only after January. Of course, the levels at which we are, we can't rule out that there could be some small 300, 400 points rally on the Nifty. That looks very much possible. That can happen. But I think the risks remain and the markets still remain vulnerable to overall situation.
What's the biggest risk for the market per se, Dilip, according to you? I mean, there are many, of course, many things which go into the mix. But what's the dominating driver at this point?
Well, I think a couple of things. What I would think is that first and foremost, the so-called recovery which we all of us, the entire financial community in our entire wisdom had really started thinking that as soon as the new government took over, that there would be earnings upgrade. Now I think all of us have reconciled exactly to the opposite view, that it would take some more time for the recovery to happen, and on the back of that even the corporate earnings growth possibly will get delayed. So I think the worry over here would be that is the recovery really going to get postponed much beyond that? That is going to be the risk to the market. And second, of course, not to forget that the international factors, whether it is China, whatever data, if you were to just take out US for the time being, which also is very choppy in the sense of the data, but if you were to take any other parameters from the emerging markets or any of these countries, whether China, Southeast Asian countries, whether South Africa, Brazil, I think the worry would be that India would probably get cinched by the international development on the economy, where the things are decisively very troublesome. So if that really becomes a little more overwhelming, then markets possibly could seek a lower levels in the coming days. So I think the international factors compounding the Indian situation could really lead to a lot of pessimism, which possibly could develop. So I think at the back of our mind, that is the biggest fear for me, even going forward in 2016.
Okay, you got your positive picks are Sun Pharma and Dr. Reddy's. I want to talk about some stocks now. These are ideas which you've liked already, 20%, 25% higher, and you like them now, or you sort of are thumping the table after the correction and saying, well, you should buy them now?
Well, as what I said, I think markets are really going to be a lot more vulnerable. So I think the approach should be pick up some of the stocks which probably has shown a fair amount of resilience on the lower side. And I think these stocks, especially the pharma basket, especially the front line, which have been hammered in the last fortnight or so, whether it is Sun Pharma, Dr. Reddy, I think I'm trying to say that possibly from that perspective itself, the stocks have really taken it on the chin, and there have been very specific events. And I'm sure these events probably are going to have an impact gradually on the financial performance, and that's why you find the stock coming off quite a bit. But my broader call is that maybe a lot of it is factored, and I think some of these stocks which have corrected very seriously, maybe Sun Pharma has corrected something like 30% from the 52-week high, and maybe even Dr. Reddy has corrected almost 22% from the historic high. So I think taking all these factors into account, I would still think that these are some of the tested companies. They have delivered results over the past, and I see no reason why they will not bounce back. So that's one of the reasons why I'm really recommending these stocks. They have good management, good track record, and possibly I think this would be the time to buy them gradually and just hold it for a while.
Yeah, okay, fair enough. What about, so one problem which pharma stocks, nobody argues with the business quality or the business case, but one issue which many had was valuations. In the same, on that same line of thought, names like Aisha, Page, do you have coverage there? And if you do, what are you telling investors? I mean, Aisha high was 21,000, it's at 15. Page was 16,000, it's at 12,000.
Very frankly, very few of those stocks are really under coverage. So I'm not really in a position to comment. I know they have also come up very significantly. But my scenario for pharma was that they continue to show a good 15 to 20% bottom line CAGR in the past. And I think even going forward, I think there could be some temporary misses. But over next 2 to 3 years, I still feel that they can deliver 15 to 20% CAGR on the bottom line. And I think even the ROEs look pretty good and interesting for all these three companies. So that's why I'm a lot more confident and a lot more comfortable. And of course, as other thing would be that rupee has to gradually depreciate vis-a-vis dollar. So that's a good tailwind for the company. But all the same, I think some of these factors make me comfortable with pharma. But some of the names which you have mentioned, I'm not too sure on that.
Which of these two do you have coverage on, Dilip? iShares or Page?
Well, we have a coverage on iShares at the moment. So Page, we have really not done any detailed study. And as far as iShares, it's a kind of a soft coverage that we have. We don't have a detailed analysis on that.
Okay, all right, fair enough. Larsen is the other name that you like. Can you talk about that and why do you like it? It's at about 1350 or so. LNT.
Sure. I think Larsen has also corrected from around 1750, 1800 levels quite a bit to this level. I think if at all we are banking anything that India story has to happen, even if it's slightly delayed, I think it will get first still reflected in Larsen and Toubro's performance. And I think they have a real comfortable order book situation. Their margins are somewhat, people are a little apprehensive for the new orders which they have taken. But all said and done, I think this is one company where when there is even some bit of macro recovery on an overall basis, I think it will get quickly reflected in the execution of the orders of Larsen. And another problem which Larsen has been the working capital problem. I think that also because of the system that we are in at the moment and the environment we are in. So they are facing a good amount of working capital problem because of which the interest cost also is pretty high. But both the things gradually can get corrected. And I think from the current levels on a risk return basis for a blue chip like Larsen, I think the risks are limited, but the upside could be another 15-20%.
All right, fair enough. Dilip, we'll leave it there. Thanks very much for your time. Good speaking with you and good getting that perspective. Let's take a